Welcome back, and joining me for a closer look of the day's trading session is Jordan Toy from Legacy Family Wealth. Thank you so much for your time, Jordan. Of course, we have to start off with the US shutdown that actually happened. We've seen over the last few years, the Democrats and Republicans they've been able to reach deals. Of course, the last time we saw an actual shutdown was in Trump's first term. But there had been anticipation that things could be different this time and that we actually could get to this point. But it seems that the markets are unbothered. Is that what you're getting?
Yes, I think our expectation largely going into this was that markets would shrug this off. But I think the time or the length of time is key, right? The longer this goes on, I think the less comfortable markets will be.
Okay.
And we saw a little bit of rotation today. Treasury yields, when I last looked, were somewhat down, gold a little bit up. So I think there is, in part, a bit of nervousness in that rotation to safe haven assets, but nothing material. We're not seeing any major moves in markets.
Yeah.
I think, like I said, what's key is that length of time, right? How long does this persist for? Because, what typically happens in these cases is the employees are furloughed, I think is the word.
Yes, that's what they're using.
So effectively you're on unpaid leave until this is resolved, and it hopefully will be soon. And the expectation is then that you come back, you go to work, and you get back pay for that time. What's a bit of a spanner in the works is we know President Trump has been talking about, and whether it's a negotiating tactic now to put pressure on the Democrats, or actually what he intends on doing, he was talking about sort of not furloughing some of those employees and actually permanently firing a portion of them. We're talking about sort of 600,000+ federal employees in the Washington area, or at least in the broader federal government. So this is not immaterial. And I suppose the concern becomes, all right, if there are some permanent firings taking place, what does that do to the unemployment numbers, which we're probably not going to get later this week. The payrolls data is likely going to be delayed because the Bureau of Labor Statistics kind of goes dark. That's not really going to continue releasing data while this is on the go. So a difficult one. It seems like Republicans are blaming Democrats. Democrats are blaming Republicans. No one wants to sort of be at fault or be the cause of this. So we'll see where it goes, but the length of time is key for the shutdown.
You talk about those non-farm payrolls for September not coming out on Friday, but we still do have some data that came out, the ADP private payrolls today, that actually surprised to the downside. How much weight then does that print carry in the absence of those non-farm payrolls?
I think definitely there's an increasing focus on sort of the both the ISM and ADP data, any of the private sector data that's coming out. Yeah. But I think it only covers a portion, right? It only covers the private sector, so it's not as comprehensive. I think the Federal Reserve will also downweight that data. So it's continuing to point in the direction of sort of labor market weakness, but I think Friday's data was vastly more important and carried more weight with it. So especially in the Federal Reserve's eyes. So that complicates the picture for the Federal Reserve, right? You're basically flying blind in a foggy environment here. It's not making it any easier. And like we talk about the length of time that the shutdown persists, what does that do? I mean, we have consumer price inflation data that should be coming out sort of middle of the month. That potentially, if this goes on for too long, could also be delayed. And you've got a Federal Reserve meeting towards the end of the month. So, there's a lot of question marks around how they make a call in this environment. And just based on some of the commentary we've seen out of the sort of voting committee, does that make a rate cut less likely? I think so.
Okay. It's quite interesting that you mentioned, kind of rotation that we're seeing, and obviously we're seeing this flight to safety, flight to gold. I would think that the equity market in particular, of course, except for gold miners, would be suffering, where investors would be making that rotation from equities, for example, tech into gold. But that doesn't seem like the case, and particularly when you look at the market darling that is Nvidia, and it continues to make headlines for all the right reasons. Of course, we know that it hit that $4.5 trillion market cap. Just talk to me about, do the fundamentals of this company keep improving and keep supporting its growth trajectory?
For the time being, that appears to be the case, right? It seems to be the gold standard in terms of data center chips for AI purposes. So it doesn't seem that in the near future there's going to be a competitor. I mean, AMD is probably the nearest competitor in that space, and they're not really anywhere close in terms of the amount of chips that they're selling to these data center providers. There are some concerns around the sort of circular nature of this. I mean, you've got the sort of last piece of the circle was completed recently with the deal between Nvidia and OpenAI. My take on that is it's more a case of the pressure that the purchase of these Nvidia chips puts onto OpenAI, where this deal is not necessarily just an investment in OpenAI. They're turning around and buying Nvidia chips. There's sort of a sale, sort of a lease, sort of purchase agreement that's in place there. So, I mean, you talk about the market cap. I was looking at it earlier today, and I think it's been covered widely, but I mean, Nvidia is bigger than Germany's GDP. It's sort of multiples of the size of the entire JSE, so absolutely a behemoth of a company. Whether that continues, there's no signs of these companies slowing down their spend in the AI space, and they keep talking about compute being constrained. It's a question of whether and how fast the actual revenue being generated from AI usage, whether that catches up quickly enough, and whether the data center spending continues.
Well, talking about a behemoth and companies that aren't slowing down, Capitec being one of them, biggest bank in terms of customer numbers. They came out with their half-year results, and you just saw double-digit growth across the board, headline earnings. They also increased their dividend by the same rate, 26%. What's also interesting is that net interest income, both net interest income and non-interest income, actually saw significant growth. What do you make of just the continuing momentum, upward momentum of this bank?
No, well, and you touched on a couple of the key points there, but the data across the board, I think, suggesting that the company goes from strength to strength.
Yeah.
Saw the share price was up, I think, when I last looked, over sort of 2% level.
Yes.
So the market clearly impressed with those 6 months figures out today.
Yeah.
But I mean, across the board, you had return on equity over 30%, which was phenomenal. What stood out to me more so than you talk about their earnings per share numbers and some of these figures, what really stood out to me was some of the non-banking areas of the business really growing. I mean, okay, back to the banking side, you had massive amounts of transactions on the app, so digital's continuing to perform for them. But then the non-banking services, so the value-added services, sort of lottery ticket sales, data purchases, that was up strongly. The Capitec Connect business continues to shine. I mean, that business grew strongly, or that sector of the business grew strongly. So really pleasing to see, as well as insurance, by the way. Really pleasing to see those other areas. It's increasingly looking less like a bank and sort of an integrated financial services platform. And I think the key for me there is it's driving sort of client stickiness. There's cross-subsidization or cross-selling potential across the business now, because you're sort of building this ecosystem. And I think that just further entrenches the moat that they've got in place. So a lot of good to talk about. I think on the slightly negative side, we did note some increases in credit impairments, credit loss ratio slightly ticked up. So definitely in the banking and financial space, something to keep an eye on, considering the magnitude of those increases, and as well as the customer base that Capitec services, I think maybe more credit sensitive than sort of different LSM groups. So not all positive, but I think the positives far outweigh the negatives today.
All right. Well, talking about positivity, let's get to your stock pick for today.
So I wanted to talk about Nike today. I think not a controversial pick, but one, if you pull up the 5-year share price performance, is not exactly shooting the lights out. But it's one that I've been following quite closely because of exactly that, right? It's a question of a turnaround story. We know that a couple of months ago, a new CEO came in to take over the reins, and they recently had earnings, or an earnings update, which showed some more positive sort of green shoots coming out, right? So we know wholesale relationships were damaged where they sort of try to go direct to consumer. That was pleasing to see that wholesale was improving. We know that the North American market for them was sort of up 4%. So some green shoots, some moves in the right direction, but they're far from out of the woods yet, right? We know that in that earnings announcement, they talked about this isn't going to be a linear recovery, and in fact, they expect this sort of December period to be less positive, but they're surprised on the upside. So I think for me, it's the first indication of, okay, there might actually be some momentum building in this turnaround story, and the stock obviously trading at quite depressed levels relative to its historical prices. So one to certainly keep an eye on.
All right. Well, thank you so much for your time and keeping your eyes on the markets for us today. I really appreciate your time, Jordan. That was Jordan Toy from Legacy Family Wealth.